It feels like forever, old friend, but MusclePharm finally released a collection of its publicly disclosed financial reports. For those that are new to my channel or maybe are not all that aware, why I'm calling MusclePharm my old friend in a lovingly way is because I actually worked there during the early 2010s, what they call kind of the golden years, when the sports nutrition brand was in its hyper growth phase. And for those that maybe aren't around the sports nutrition category as a whole during the early 2010s, to put it into kind of context, MusclePharm was, if you combine both of the current era kind of it brands of Ghost Lifestyle and Redcon One, you combine those things together into one crazy machine. That was what MusclePharm was in the early 2010s. But outside of just kind of stating the obvious, just in case anybody was not aware, I also wanted to make note of this, especially early in the video, because it does acknowledge that there might be some inherent like subconscious biases that could arise in this video because of my prior employment status. But that being said, I'm going to circumvent that by, one, just sticking to the publicly disclosed information that surrounds MusclePharm that anybody can look at and view through portals through the SEC filings. Also want to make sure that I'm being transparent, and I'll pop up the video for you guys here if you've not watched this one, but I was in Burbank, California at MusclePharm's facility, and I did kind of a tour, just a quick kind of vlog video, but it was also attached to a small project-based working relationship in which the due diligence discovery document has now been completed. And while we don't have any current, at least at recording, ongoing working relationship, the project in which I was working on was forward-looking, and I am under a strict NDA, so I'm going to be kind of really sticking to the publicly disclosed information. That all being said, and maybe that sours your thoughts of this video, what I'll say is over the last 18 months, there's been a ton of news that has happened with MusclePharm that if you haven't been paying close attention to, this video is going to catch you up extremely fast. So looking at like a timeline over the last, I'd say 18 months or so, if you're looking at like current reports, so some commentary around events that happened at MusclePharm that they have to publicly disclose for SEC purposes because they are a publicly traded company. Why we haven't seen any financial reports for a while is because on March 14th of 2019, the MusclePharm Audit Committee of the Board of Directors, along with their public accounting firm, did find when they were putting together their year-end report that there was some issues around the revenue recognition internal controls. And that might all be mumbo jumbo to you if you're not too aware, but it basically was around some of the sales cutoff procedures that were happening at maybe month end or quarter end or year end that the auditors were feeling like there wasn't the proper procedures in place to ensure that there was a proper cutoff. Revenue recognition, depending on what type of revenue, there's so many different rules in terms of like how you can recognize it, how you have to recognize maybe the sales and promotional activity attached to that sale, accounts receivable, bunch of things like that. So that's what these auditors kind of figured out. And oddly enough, this type of revenue recognition finance work was actually what I did at Microsoft, which I worked at up until MusclePharm made me an offer to leave and come to Denver. So kind of interesting that that was what kicked this all off. But full disclosure, at MusclePharm, I didn't really have anything to do with accounting or finance procedures. I was dealing with a lot of other different projects. Now, on May 1st of 2019, they hired a new chief operating officer. June 6th of 2019, they released two of them, and they kind of combined together their previous public accounting firm, the one that did bring up the internal controls issue. They resigned before all the restatements of financial reports were done. The same day they hired a new public accounting firm, but because of that changeover, this is what created a ton of time in between the last earnings report they put out and upwards to last week, where they finally restated and reported all of their previous ones to the end of year 2019. Now, on September 18th of 2019, Ryan Drexler, which is their CEO, president, largest shareholder, decided that he was going to switch over a $18 million convertible promissory note over to common shares. So took away debt, put that over to equity. It cleared up a lot of the balance sheet at the time, which then creates an ownership kind of risk, that footnote that gets put into a financial reports, because Ryan Drexler now owns 55.7%, which anybody that owns over the majority, they have essentially full strategic control to make whatever movements possible that they deem most necessary for the success of the business. That doesn't mean that's a bad thing or a good thing. It's just a risk footnote that has to be disclosed within a publicly traded company. Now, on December 19th of 2019, that chief operating officer that they hired about 7 months ago, he actually resigned and they hired a new one. April 24th of 2020, this year, they hired a new chief financial officer. On May 7th of this year, their highest ranking sales officer decided to leave the company. On May 21st of 2020, they received $965,000 or so in a PPP loan from the CARES Act from the government. On July 28th of this year, the COO that they hired about 8 months ago, he also resigned. And then finally, the last current report that was put out publicly on August 27th, just a few days ago of recording this, there was an amendment and a restatement to a promissory note, again from Ryan Drexler, but was not converted into equity. That was quite a bit of news that happened over 18 months. Obviously, these are big things. Anything that happens below that, not needing to be disclosed to the SEC. Tons of things probably happened as well, but those things are not publicly disclosed. But you could see some common themes across those current reports. But last week, MusclePharm did finally release some of their earnings reports, and they went through a few quarters that they missed, and then finally they got up to the point where we could see the end of year of 2019. So that's where I'm going to kind of jump. I'm going to move past all those individual quarterly reports and just go straight to the end of year report of 2019. MusclePharm has not released 2020's quarter one or quarter two, but I would assume probably in the next couple of weeks they'll either put out some commentary around when they will be releasing those reports. Now, just looking at MusclePharm from a net sales perspective, over 2019, they had net sales of $79.7 million. Now, that 10.6% year-over-year loss, if you break it down into domestic and international, they had a sales gain of 1.8% year-over-year on the domestic side, and then had a loss of sales on the international side of 29.4% year over year. Now, anything over a 10% of total sales of like major customers also needs to kind of be disclosed. Publicly traded stocks on their earnings reports, because it does create some risk. And MusclePharm has 3 of these large customers over 10%. Costco being the biggest one. In 2019, that was 33% of their business. That is up from last year, which was 29%. Their second biggest customer was iHerb, a website that sells both domestically and across a ton of different markets internationally. They made up 17% of the sales, and that was up from last year's 13%. And then Amazon was 13% of this year's sales, and that was the same as last year's percentage of total sales. As I mentioned before, any customer that's over 10%, there is a risk footnote that kind of gets thrown out there, and that's mostly because if any of these customers decide to end the relationship, maybe they put pricing pressure, maybe they stop purchasing or restrict some of the purchasing during the year, that could really make huge differences in a business. So they need to kind of just alert investors of that potential risk. And these 3 customers that are over 10% with MusclePharm do equate to 63% of MusclePharm's total sales. Now, if we break up sales by channel, you have specialty, which oddly enough includes iHerb, which is an online retailer, and Amazon. That is 45% of their total sales. They have international, which is 28% of their total sales, and then food, drug, and mass, that makes up 27% of their total sales. There's also a few footnotes in there around risk associated with like contract manufacturing. Anything that's over 10%, you kind of have to, again, throw a footnote out there just in case for risk purposes. And just because a lot of my followers are interested in contract manufacturing or maybe where to contract manufacture, just throw a few names in terms of who MusclePharm works with. NutriBlend makes up 22% of their 2019 contract manufacturing business. SK Laboratories made up 34% of their contract manufacturing business. And then they also noted some prior year, like year-over-year changes, and these have fallen below the 10%, but in 2018, there were 3 other contract manufacturers that they did utilize more than 10% of their total contract manufacturing business. And that was For Excelsior, also Bakery Barn, which is a protein bar maker, Pronova, which assuming it's probably Armada because of them being the contract manufacturing arm of Pronova. But like I said, those 3 names are below 10% this year. They could be 0, but year over year perspective from analysis, they did note those on a section of the earnings report. Now, a few other kind of public things that are out there and are on the earnings report in terms of just legal proceedings. Ones that are notable for my followers would be that in 2016, early 2016, Thermalife sued MusclePharm around a contract and usage of nitrates. In December of 2019, Thermalife was awarded a win in that case, but it does note that MusclePharm is appealing that decision. For Excelsior, the contract manufacturer that I noted earlier, in March of 2019, they sued MusclePharm over a discrepancy in invoices getting paid, and then MusclePharm countersued them on invoices not getting fulfilled. And then NutriBlend, again, another contract manufacturer that I noted above, in late February of 2020, they actually sued MusclePharm over unpaid invoices. And again, MusclePharm is planning on battling that in court through one methodology or another. Want to note a little bit around the balance sheet strength in terms of the business continuity of MusclePharm. At the end of 2019, they had total debt of just over $10 million. That's down from $20.7 million the year before. A lot of that came from, in that current report that I was mentioning around their CEO, Ryan Drexler, converting a large portion of debt over to equity. That took a lot of that off the books for MusclePharm. There's also a big portion of that $10.2 million that is considered related party debt, again, to their CEO and largest shareholder, Ryan Drexler. And because of that, he can kind of change up some of the due dates or interest payments or things that might be beneficial to MusclePharm's success, because as the biggest shareholder and as the CEO, as MusclePharm succeeds, he succeeds. So that's important to kind of note. But the auditors did, and have for as long as I can remember, attached a going concern risk footnote, basically meaning that because of the negative working capital on a year-over-year basis and the accumulation of operating losses since the inception of the business, they're unsure that MusclePharm could continue for the next 12 months without having to either raise capital or do something like that. And MusclePharm does note in the earnings report that they have looked at and can, within the bylaws of their company, to raise capital and sell more shares. MusclePharm did note a little bit of like a profitability plan of action. First item that they noted is around reducing workforce. I think at the end of 2019, they noted that they had 45 full-time employees. They plan on also controlling distribution better. So any current customers that are low margin, negative margin, flat margin, they're gonna be looking at that and probably cutting a lot of that distribution or direct sales to those customers. They plan on controlling pricing much better through reducing promotions and sales discounts, but also instituting a pricing committee that reviews all sales orders for gross margin expectations. And then they have been and currently going through a SKU rationalization process. MusclePharm noted that they have been seeing some positive effects starting in 2019's quarter 4, but up until the end of quarter 2, they've seen some positive results from this profitability plan of action. They're also noting that because of whey protein pricing overall just going down as an input cost over this period of time, they are also getting a better gross margin picture because of how much of their revenue comes through the Combat Hero SKU family. Quick notes on the COVID-19 effect, even though we're surely going to get more public commentary that comes out when the Q1 and Q2 reports of 2020 get released. But MusclePharm noted in April they started to see some of their retail customers start to struggle, even their biggest retailer. But they said on the flip side, their online customers, especially their largest online customers, we're seeing a large uptick in sales. Management believes because of all of the profitability plan of action steps, elements of that, and a lot of the top line sales meeting expectations, they believe there is a path to profitability that can be seen in the near term. We'll more than likely see how that is being played out over quarter 1 and quarter 2 of 2020 in terms of like the profitability note at the end of that one, in terms of seeing the light at the end of the tunnel. But that has to be great news to see from any shareholder of MusclePharm, because there has been an accumulation of operating losses since the inception of the business. Now, if you're interested in hearing more about MusclePharm and some of my financial breakdowns of this sports nutrition brand, make sure to subscribe to my channel. And as some of these other 2020 reports start to be released publicly, I will be creating videos to specifically cover those reports.
Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.